Hi everyone, I'm Alex. Today we're diving into the most significant tax changes hitting Canada in 2026. Before we dive in, welcome back to my channel. I break down complex CRA tax codes, US stock opportunities, and wealth building tips specifically for Canadians. Subscribe for weekly updates to help you save and earn more. Okay, back to our topic today. These are the latest updates from the CRA that will directly impact your wallet, especially if you're mapping out your finances in 2026. Now, while I'm breaking this down clearly based on official data, please remember, this is general information. Always check your CRA My Account or chat with a tax pro for your specific numbers. Let's get into it. First, let's start with the headline everyone's been waiting for, and it's a positive one. The lowest federal tax rate is officially locked in at 14%, down from 15%. This applies to your first chunk of income up to $58,523. If you earn under $58,500, you're going to notice more breathing room in your paycheck. The average person saves roughly $190 to $300 annually. That might not sound like a lot, but it's enough for a few nice dinners out or a couple of extra tanks of gas. For a working couple, you're looking at pocketing up to $840 more over the year. It's not life-changing, but in this economy, every bit adds up. On top of that, the basic personal amount, the portion you earn completely tax-free, has jumped to $16,452. This is a massive win for students, part-timers, or retirees whose income falls below that line. To give you the full picture, here are the federal brackets for 2026. 14% on the first $58,523, 20.5% up to $117,045, 26% up to $181,440, and 29% up to $258,482. And 33% on anything above that. Everything's been indexed by about 2% for inflation, so we're fortunately avoiding any sneaky bracket creep this year. But here's the thing, don't forget that each province also has its own tax rate adjustments. For example, Ontario and British Columbia have their own inflation-linked adjustments for their provincial brackets. Ultimately, your total tax bill and that final refund amount depend heavily on where you live. Now, let's look at the flip side, because there are a few areas where costs are creeping up. Payroll deductions, specifically CPP, are rising again, but the most significant change for high-income earners is CPP2. In 2026, there's an additional 4% deduction for anyone earning between $74,600 and $85,000. For high-income earners, this second-tier contribution will be the most noticeable change on your paychecks. If you earn $74,600 or more, your max contribution will hit about $4,646. That's a few $100s more than last year. It might bite a little now, but I see this as a long-term play. Remember, this enhancement is building a much stronger pension for us down the road. On the other hand, employment insurance is a bit milder. The max insurable earnings rose to $68,900. The rate actually dipped slightly to 1.63%. So while your paycheck might show a small extra hit, it shouldn't be dramatic for most of you. So how could you fight back? By maximizing your registered accounts. For 2026, the TFSA gets another $7,000 in room. If you've been eligible since 2009, your total contribution room is now a staggering $109,000. Interest, dividends, gains, they all grow tax-free. It's my absolute go-to for flexible growth. Then we have the RRSP, with the limit climbing to $33,810. If you're saving for your first home, the FHSA remains your best friend. $8,000 a year with a $40,000 lifetime cap. It's truly the best of both worlds. You get the deduction like an RRSP and tax-free withdrawals like a TFSA. If home ownership is the goal, prioritize this account first. Lastly, some good news for investors. The proposed hike to the capital gains inclusion rate was canceled last year, so we're staying at 50% across the board for 2026. The bottom line, lower tax rates and higher exemptions are putting more cash back into the pockets of most Canadians. Take that extra cash and maximize your TFSAs and RRSPs. That's where the real wealth building happens. If you find this breakdown helpful, hit the like and subscribe buttons. And you can grab the 2026 tax summary PDF from my group. The link is in my bio. We'll also share exclusive tax saving tips and investment strategies there. I'm Alex. See you next time.